Mark Selby, Chair and CEO, Canada Nickel, advancing the Crawford Nickel Sulphide discovery, the largest since the early 1970s, to end of feasibility study the end of this year and towards production by the middle part of this decade.
Mark, good to see you. Thanks for coming on. We kind of caught up last week and we briefly covered off some of the things I want to talk to you about today, okay? Because you're getting a bit of stick at the moment. You kind of, been on this wonderful run for the last 18 months, accelerated time frame, all of that kind of good stuff. Your share price is getting hammered at the moment. I want to understand why, because you put out some press releases last week. Obviously, you raised 51.6 million bucks, but it didn't come from the strategic partner you've been telling us about. And also press releases about putting up much higher grade drill results, and market doesn't seem to care. So I just want to try and understand what's going on. So let's maybe kind of deal with some of those variables, and then I want to understand the why. So higher grade drill results, that's good news.
Yeah. Oh, no. We were very happy. I mean, right now has largely been an infill drilling program because we're going to get a resource out by the end of the Q2, which it'll support the feasibility study at the end of Q4. We had a press release back at the end of last year about this higher grade core that we found in the east zone. And again, we're expecting, higher grade for this project today to somewhere been in the, anywhere north of 0.3 and up towards 0.4 to 0.5. So, we were very happy when we saw 70 meters at over 0.6 and in that, 12 meters at 1% grade, in the deeper part of the east zone. And so, again, the fact that it was, this system was able to generate those kind of grades in that specific location, creates the opportunity for, us to find, potentially more of those grades elsewhere in the deposit. Yeah. And again, we've been very focused on infill drilling and maximizing the capital efficiency of the drilling that we're doing. So we really haven't had a chance to step out too much yet. But now that we've got the money in the bank, we'll be able to end the resources drilling for the resources done. We can start to step out a little bit and see what else Crawford has in store for us.
Well, look, I just perhaps going over a bit of ground which we've again covered off before, but anyway, for anyone new to this, it may be interesting depending on what you say, I guess. Which is there's not a lot of drill holes gone in, so it's a very different type of drilling and exploration for this type of nickel ore body that you're saying. I'd love to understand the why, and then I would love to actually understand: can we expect to see? Because you're starting to understand a little bit more about the ore body, can we expect to see more of this high grade stuff? Because 0.3, 0.4 doesn't sound too good. I don't know how you make money at those sorts of numbers. So how do you improve that picture and that narrative?
Yeah. So in terms of the efficiency of this drilling, in terms of meters drilled, in terms of the resource that you get, again in scale, these are much more like large low-grade copper porphyries or molybdenum porphyries, where you have a very disseminated material. And again, what determines your drill spacing is the geologists do calculations around geostatistics and figure out, okay, how far apart are the drill holes before you have a certain confidence in terms of the resource that's there. And in a disseminated ore body, those things can be very widely spaced. So again, if you look at any large lower grade copper porphyry, you'll see very, very similar drill spacing to the kind that we're using here. The other part that makes it really effective is, again, when you're drilling for high grade narrows, stuff, you might drill a 500 meter or 800 meter hole, and only 10 meters of that 500 meters ends up as assays that go into block model. In our case, when we drill a 500 meter hole, once we're through the overburden, it's basically, meters that are going to end up in a block model. So we'll get 470 meters worth of assays out of a 500 meter hole. So again, in terms of nickel generated per dollar of drilling, this is very, very, highly effective. In terms of grade, again, when you're mining underground and you're mining a couple % nickel, that's great, but your mining cost is going to be well over $100 a ton, to mine typically those types of ore bodies. When you're mining at open pit at the scale that we are, again, you're looking, sub $2, Canadian, for the kind of deposit that's there. So, what you need to look at is the, NSR. So how much revenue do you get for every ton of rock you pull out of the ground, and how much operating costs? So, in our case, the PEA, the best years were $30. On average, it's 20, and our average life of mine cost is about, just over $8 a ton. So you're looking at a 60% operating margin for 25 years, and again, from the resource drilling we're doing, we're expecting a 50 to 100% plus increase in that resource. And we're very confident based on the results that we had in that release and the results we've had since, that we're going to, come in very, very well on that front. And so, we're going to have a very, very large scale resource that, these types of grades and these types of scale can be very profitable operation. And so again, when you can get to 0.3 to 0.4, that extra incremental revenue, becomes a lot of incremental cash flow.
Okay. And so just remind me that the new resource comes out when?
Before the end of Q2.
End of Q2. Okay.
Yep.
We're quite close. Okay. I understand that better. I even buy that. In terms of the economics of multi-decade or even multi-cycle events. So the next bit is you told the market you were going to bring in a strategic partner. Mm-hmm. So that's strategic, who would also use their balance sheet and I'll put equity into the company. That didn't happen. You went out to the market and did it conventionally. 51.6 million. It's a lot of money. Where's the strategic guy?
Yeah, so I talked about it all through the second half of last year and in the first part of this year. There was one group who was very close and had some other issues not related to our project at all, but with the rest of their asset portfolio that stepped away. We're in discussions with other people. Simply, the reasons why we were doing a strategic investor, it was fundamentally, it's a means to an end. It's two things. One, it tells the market, that the project, is needed, by the industry. And number two, it helps give confidence because again, there's not a lot of deposits that look like this. And so fund managers and so forth need a little hand holding to feel confident to step into, to quote, a new type of story. And so, when the LME ceased trading, people realized that 1/4 of the world's nickel that's not Chinese controlled just became radioactive when Russia invaded Ukraine, and the nickel price went up to nearly $100,000 a ton. That was more than enough convincing for us to get more than 25 institutions to come into the story, most of them for the first time, and be able to raise all the capital we need to get to the second quarter next year. That's without giving up a 10% stake to somebody, which might act as a deterrent for some people who may come in and want to take us out at some point. Two, we don't have a big brother who's got maybe a whole pile of internal policies and approaches to things that they're going to try and insert themselves into the process and slow us down in terms of what we're trying to accomplish here. So. And it leaves us, with all of the options on the table. And those strategic discussions are still coming. I'm in Europe today. I was in the continent earlier this week. I'm in London today. And so, the good thing is now is with being fully funded, we can take our time. We have all the leverage. And again, the nickel market is just going to continue to improve as the year goes on. And the other key piece is strategics never buy in the market. What we want to do is get out of, we've been kind of capped into this $3.50 share range, for the last while, and we need to break out of it. And the way you break out of it is to have some large institutional buyers start picking up stock, aggregating stock. They need a starter position to get going, and they're going to start accumulating that stock. And so once we get through this noble overhang, which is where has been a big negative for the share price in the last 3 weeks here. Once we're over that, you'll see these guys step into the market, and we can move forward from here.
Okay. I'll talk about Noble in a second, right? Because I need to understand what's going on with the share price. I said you've been in the darling of the market, nickel market for sure, for a while, but not so much in the last 3 weeks. But let me come back to this, your statement, because you said need a strategic because it shows that the industry needs us, they value us and what we're presenting to the marketplace. So I appreciate all the reasons why it's also a good thing not to have a strategic on board, as you've just outlined. Okay, I understand that. But was it a case of it's not you, it's me? Like it's some sort of breakup line. It's not necessarily the case. When you say they had their own problems, there'll be people that go, oh, sure, they said that. So what do you mean by that? It wasn't us, it was them.
Yeah, so in that case, there's somebody who's been fairly aggressive in the marketplace and had a couple deals of their other deals blow up in their face, which then made their ability to complete a deal. And again, having been in the corporate development space in mining for 20 years, I've only had one other deal fall away that had gone this far. So in that specific case, it was them, it wasn't us. And again, the other participants at the table, they take longer. They're on longer fuses. We knew that, and so again, people say, oh, Selby's lying. He's full of whatever. Those discussions are ongoing. The Russia situation has just created another whole level of urgency in some of those discussions, and so stay tuned, and we'll see how the rest of the year progresses here.
Okay, so what I'm hearing is you got the money you wanted. That's the key thing. Means to an end. That's what you wanted. The money, the endorsement by a strategic, a industry player, recognized industry player. That hasn't gone away, but you want to be in control of the timing, not rely
the timing.
on them.
The timing and the terms are now in my control, not their control.
Got it. Okay, and I guess with the money on board, it allows you to do things which increase the value, which increase the type of conversation you might have with that strategic over their participation and what they get for it. Okay, understand that. What I can't understand, if I believe all of the above, is why your share price is being hammered. You've indicated that there's an overhang with Noble. Maybe explain the Noble connection from way back when, and and what that means to you today.
Yeah, so Noble was one of the founding companies where we acquired the asset from. They had a block of shares. We've done some other transactions with them to accumulate some other properties around us, and so they have about 5.6 million shares, as of now, and then they announced a dividend that's coming out of about, I think it's going to work out to about 3.5 million shares. Because it's a substantial portion of the value of the company, it gets treated a little bit differently. So a portion of it's what's called a return of capital. So it's not a taxable dividend per se, and then a portion of it, depending on where our share price is, which is I believe April 18th. Anything above that will be treated as a taxable event. So the return of capital number based on the share count, a month or so ago was closer to 280 something. And with a bunch of warrants getting exercised, and so there's more Noble shares outstanding. It's the same number of shares. I think that return of capital numbers dropped down to about 260 something. Those, if you're a CNC shareholder, you might have seen those prices 285. Where we've been trading for the last 6 weeks, and then not surprisingly, where we've stopped in the last week here is around the $2.60 mark. So whether it's Noble shareholders themselves, whether it's hedge funds anticipating that Noble shareholders are going to be doing something and pushing prices down to that level, that's the unfortunate situation with the way that that dividend was structured. That's created that response. We saw a huge number of shares shorted just before and reported just before on March 31st. Some of that would have been the deal. When we announced that our share price popped up from the 285 level up to 3 something. With the Russia LME announcement, and so we did the deal at 310. So it would be normal for hedge funds to come in and short your share price down to the issue price, but to start shorting your share price below the 310 without a warrant attached, and again there were no warrants issued in this deal, is pretty silly. I've seen a few comments around flow through shares, and it was the flow through guys who are shorting the stock. Again, we did an entirely flow-through raise in August of 2021, with 4-month hold paper, and this is free trading. So they would have had to hold it for 4 months. It would have been a perfect opportunity for them to short it during that time frame, and you will see no increase in our short position during that time frame. We did the deal with most of the stock going to good quality, who've been shareholders who've been long-term and very supportive of the company. So, the fact that they were going to turn around and dump stock below the issue price. And again, I know the flow through shares, traded at a much bigger discount, effectively on a tax adjusted basis, but it hadn't happened before. So to think that they're doing it now is a little bit unbelievable.
Right. A lot of people are also saying, well, this is a factor of you raising the money like you did. No one's talking about the Noble overhang. They're talking about you've gone and raised this money in the way that you did that they weren't expecting, and that's the reason the stock is down. Is there any credence to that thought?
No, I mean, again, at the end of the day, when you're a largely retail net worth base, that takes you to a certain market cap level. To be able to get up to the $1 billion plus market cap level, you need large institutions who have multi-billion dollar assets under management who need a starter position, who need $500,000 or $1 million or $2 million worth of shares, and then they'll start to accumulate once they've got that starter position. We've never been in the position to do that before because we have not done a lot of capital raises since the company got going, and this was our chance to get 25 new funds, a starter position, to start advancing the Canada nickel story. So, that's what you need to do to be able to take your company to the next level.
Right. Okay. A few things I want to talk about. You're going to you're going to put out a new resource, presumably increase, at the end of Q2. How many holes drilled for the first resource? How many more holes are going to be included in this new resource?
Yeah. So the PEA was cut off at 65 holes. We're at 200 plus today, so there'll be just over 200 holes that'll be utilized in the resource base. And again, the PEA took 900 million tons in a mine plan out of a 1.1 billion ton resource. We're expecting a 50 to 100% increase in the resource that'll be utilized in the mine plan. So 1.3 to 1.8 billion tons, out of a much larger resource base that'll be defined.
Where do you think potentially that puts you? You were top 10, top 8 in terms of size of resource, and you've talked about the economics earlier in the conversation. Where does that put you in terms of size on that top 10 list now?
Yeah, in terms of sulfide resources, that would easily put us in the top 5, and so just behind some pretty big companies and some pretty profitable, productive mining operations.
Right. Next, understood. Next, I want to understand, you've got $51.6 million. You had some money in the bank already. So, and you talked about an expedited process, right? You're going to feasibility study by the end of the year. We'll understand the economics a little bit more than we did around the PEA, a little bit more certainty around the PEA. So what are you going to be spending the money on to make sure that the economics are as robust as possible? Because that's the thing the institutions are going to look at. That's the thing the strategics are going to look at. And I guess the market as a whole, the industry as a whole. So what's happening with that money?
Yeah, so from now until the end of the year, there'll be a big portion of that spend on the feasibility itself and the detail engineering there. And again, to do the work to have the generate the data, so that the engineers will sign off on the feasibility study, and then 2, be able to spend the time to make sure that it's optimized and taking the value to the maximum extent possible, given what we know about the deposit today. The other 2 big streams of work, where you're going to see expenditures are, one in terms of, exploration potential. We've been focused primarily on Crawford. We poked a few holes in some of the neighboring properties. But again, at the end of last year, we closed 18 deals on 13 new targets. And, again, we've got a bunch there that we think are even bigger and better than what we thought Crawford was back when we started the company in July 2019. So with this funding, we're going to be able to move actually a little faster than I was expecting, 4 months ago. And then the other key piece of it is the permitting process. So we're very shortly here going to be filing what's called the initial project description, which is a document that goes in to the government. They start the formal consultation process with that. And that basically starts the timeline running in terms of the permits, which we expect to have provincial and federal sign off by the middle of 2025. And again, there's a bunch of detailed test work that you need to do to be able to support what's called the environmental impact statement, which will be filed in another year or so, which will be used by the government to evaluate the project and be used in the permitting process.
You see, that you actually kind of touched upon what I was going to ask about now. I'm just trying to kind of go through what I need to believe and understand, to say this is the time to invest, right? So, which is you went and bought up a whole bunch more properties last year. The feasibility is on Crawford alone. I know you've done this a little bit more kind of step out drilling over at Crawford East, which is sort of showing these higher grades, but and that's not going to change it. The feasibility is just entirely on Crawford. right? Yeah. So what percentage of the 50 million or so bucks is going to go on the exploration component, and where?
Oh, outside of Crawford?
Yeah.
So we raised about 20 million in flow through, and the bulk of that will be spent on the regional exploration, and then as well to some of the PGM zone at Crawford, which we've basically ignored for now, because in terms of value per dollar spent, it was better spent delineating the resource on the feasibility study. But again, pretty much every time we poke a hole in that spot where we think the PGM zone should be, it shows up. So we'll be allocating a little bit of that, but the bulk of that flow through money will be spent on the regional properties.
Right. Okay. So I'm going to take out the kind of LME debacle, which kind of drove share prices, nuts. You were up over $4 at one point there. If we take that out, you're sitting, you're bouncing around sort of 320, 330, 340 level. You're at 260 now.
Yeah.
Why on earth would I invest in your company right now until we get some clarity about what's going on? What's the upside for me?
Yeah, so once we get through this noble noise here, you're going to get the resource update, which will be a very substantial increase in the resource. That the increase itself will be bigger than most of the deposits ever discovered. You'll be a feasibility study on what will be one of the 5 largest nickel sulfide operations globally, in a market that's now desperate for new nickel projects. And it'll be one of the largest base metal operations in Canada, which again, given all the political issues in South America and other quote safe jurisdictions, Canada is looking even better by comparison. And then you're going to be getting a whole series of results out as we start to step around, these regional properties. And again, when I formed the company in September 2019, there was one historical hole that Inco had poked in the 60s. Somebody that the previous owners had drilled 4 holes when they come to me and said, we think this might be something. And there was a geophysical anomaly. That was it. On a bunch of these properties today, we have the geophysics that looks the same or better in terms of scale than what we had at Crawford. In some instances, we have some of these deposits that have 5, 10, 15, 20 holes where they didn't do any assays, but the visual description of the mineralization that was there is exactly the kind of mineralization, that we're looking for at Crawford. And so again, confidence-wise, in 2019, I took most of my net worth and put it in this company. I've continued to buy the stock all the way through last year because, again, I believed in the potential, the regional potential we have to be multiple Crawfords. And today I'm as bullish about where we are at 280 and the upside from here as I was in September 2019 at 25 cents, and where we've gone from there.
But you should be, and that's what you've got to be, right? But for me, I'm looking into this thing going, I need to understand where this goes. So what does something like we will be a top 5 nickel, in terms of scale, top 5 nickel company globally. We will be the biggest base metal company in Canada. What's that even mean? Like, how do I understand what the scale of that? You're 290 million market cap today.
Yeah. Big companies only want to buy world scale assets. You saw, Wyloo and BHP in a bidding war for Noront just because it had big exploration potential. And one small to medium size nickel resource and a decent sized chrome resource was there. If you look at the assets that get taken out, it's for assets that have multi-$100 million EBITDA potential. That are among the largest deposits that are there. The majors already own most of the big assets in copper and zinc and iron ore and all the others. And again, what they want are large scale, multi-decade resources in good jurisdictions, where there's certainty of permitting. And so we tick all those boxes. So to be of that scale opens us up to the biggest potential bidders for this asset in the world.
So you are confident that you can deliver?
Oh, yes. Very, very confident.